What if I told you that a major global economic shift just occurred, one that could impact our daily lives, investments, and the future of the US dollar? This Sunday, the historic petrodollar agreement between Saudi Arabia and the US came to an end after 75 years. This pivotal moment is more than just a headline. It's a seismic change in global economics that could reshape our world. In this video, we'll break down what happened, why it happened, and how it affects you and future generations. Ready to dive into one of the biggest economic stories of our time? Let's get started. The end of an era. I didn't think we'd be here so soon, but here we are. The petrodollar agreement between Saudi Arabia and the US expired on June 9, 2024, marking the end of a system that has shaped global economics for 75 years. This is not just another economic event, it's a fundamental shift that could have far-reaching consequences. The agreement, born from a secret meeting on the USS Quincy, ensured that oil would be traded exclusively in US dollars. This arrangement solidified the dollar's dominance in global finance, providing the US with unparalleled economic stability and influence. Saudi Arabia's decision to end the agreement is part of a broader trend of countries moving away from the dollar in international trade. As the world's largest oil producer, Saudi Arabia's actions signal a significant shift in the global economic landscape, potentially altering the balance of power and the role of the US dollar in the world economy. This marks the beginning of a new era with uncertain outcomes. The petrodollar system. When we talk about global trade, the first thing that comes to mind is commodities. Oil, the lifeblood of the global economy, has always been traded in US dollars, thanks to the petrodollar system. This system was born from a secret meeting on the USS Quincy between US President Richard Nixon, his Secretary of State Henry Kissinger, and the Saudi king. The agreement was simple. The US would provide military protection to Saudi Arabia in exchange for oil transactions being conducted exclusively in US dollars. This arrangement gave the US two critical advantages: economic stability and control over global energy. It ensured that the US dollar was the world's primary reserve currency, making US Treasury bonds a safe haven for countries looking to park their wealth. The global impact. This system solidified the US's dominance in global trade and finance. Countries around the world needed dollars to buy oil, leading to a global demand for the US currency. But this past Sunday, Saudi Arabia's decision to not renew the agreement signals a shift. The world's largest oil producer is now seeking to join BRICS, an economic alliance that includes Brazil, Russia, India, China, and South Africa, aiming to diversify its trade partners and currencies. This trend of de-dollarization has been growing, with many countries opting to trade in their local currencies. The US dollar, which has been the cornerstone of global finance, is now facing a significant challenge: the consequences for the US. So what does this mean for the US? The biggest export of the United States isn't technology, culture, or even military power. It's the US dollar. The demand for dollars has allowed the US to maintain low interest rates and a stable economy. Without this demand, the US could face higher interest rates, increased inflation, and economic instability. Imagine the US economy as a balloon. Whenever there's a problem, the Federal Reserve can pump more dollars into the economy to solve it. But without global demand for those dollars, the balloon could eventually burst, leading to economic chaos similar to what we've seen in Greece, Lebanon, and Argentina. The global ramifications. The end of the petrodollar system doesn't just affect the US, it has profound global implications. Higher interest rates and a weaker dollar could lead to more expensive mortgages, auto loans, and credit card debts for Americans. It could strain the US banking system, increase the national deficit, and potentially lead to higher taxes. Internationally, a weaker dollar means that traveling and importing goods from other countries could become more expensive, impacting everyday consumers. The retirement savings of many Americans could also be affected, as foreign investments in US assets dwindle, leading to lower stock prices and reduced investment flows. For other countries, the shift away from the dollar could alter trade dynamics, making it harder to secure the stable currency needed for international transactions. This could lead to economic instability in countries that rely heavily on the dollar. The global financial system, long anchored by the dollar, may face increased volatility and uncertainty as nations adjust to this new reality. The reasons behind Saudi Arabia's move. Why is Saudi Arabia making this move? Several factors are at play. Some blame U.S. political leadership for creating an environment that prompted this decision, citing strained relations and differing geopolitical interests. Others point to Saudi Arabia's strategic interests and its commitment to the BRICS alliance, which includes Brazil, Russia, India, China, and South Africa. This alliance aims to reduce dependence on the U.S. dollar and promote economic cooperation among member states. Countries like China and Russia have been gradually decreasing their reliance on the dollar for years, viewing this shift as a way to assert their economic independence and challenge U.S. financial dominance. For Saudi Arabia, joining BRICS and diversifying its trade partners and currencies aligns with its long-term economic and geopolitical goals. By moving away from the dollar, Saudi Arabia seeks to strengthen its economic ties with emerging markets and reduce its vulnerability to U.S. economic policies. The U.S. response. How can the U.S. respond? One option is to raise interest rates to attract more foreign investment. However, this strategy has its limits, as higher interest rates can also harm the U.S. economy by making borrowing more expensive for consumers and businesses. Despite these challenges, the U.S. dollar remains a dominant force in global finance. Around 59% of the world's foreign exchange reserves are held in dollars, and the currency is involved in 88% of global trade transactions. While the Chinese yuan is often mentioned as a potential rival, it still only accounts for a small fraction of global reserves. Looking ahead, the future of the U.S. dollar is uncertain, but it's clear that the global financial landscape is changing. The world is gradually becoming less dependent on the dollar, and while this transition may be slow, it's significant. For investors, this means focusing on what you can control, diversifying your investments, staying informed, and preparing for potential changes in the market. Personally, I invest in a mix of stocks, bonds, real estate, and cryptocurrencies like Bitcoin. I believe in spreading risk across different assets to safeguard my financial future. While Bitcoin may not become a global currency, it has potential as a store of value and a hedge against traditional currencies. In conclusion, the end of the petrodollar agreement marks a significant shift in global economics. It's a complex and evolving situation, but understanding these changes can help you make informed financial decisions. I'd love to hear your thoughts on this topic and how you're preparing for the future. Let me know in the comments below. If you found this video helpful, please give it a thumbs up and subscribe to the channel for more amazing content. Thanks for watching, and we'll see you next time.